institutional adoption is something that fundamentally is required for us to, for Bitcoin to survive. Because the other alternative, I mean, where we are in the mining cycle, right? Like, mining economics, and I was a miner, right? Like, I had 135 megawatts in the Tennessee Valley. Like we we know what it's like to have to mine. It's challenging, right? I think if you look at mining economics today, it's hard to argue. I mean, obviously today at all-time highs, great, right? Next winter, I don't know, right? And so, like, every winter, that question gets harder and harder to answer. When are we going to turn them? When are we going to turn everything back on? When does it make sense, right? And I think that's one of those things that people have to think about. Like, if you want Bitcoin to survive here and transactions don't really pick up, and that's not the future, right? If everyone's holding their Bitcoin in cold storage, right, and no one's transacting in Bitcoin, what is going to create the incremental bid that continues to send the number up and to send the utility up, right? So utility as a reserve asset for like sovereigns, I think, is a huge thing, right? And especially if they actually buy it as opposed to to confiscate it, which has been the historical way of countries for getting their hands on Bitcoin, right? So getting them out in the market and like actually creating a bid could like be game changing for Bitcoin, and not just Bitcoin, for all money, right? All money.
So if you're a retail investor and you're looking at the public market opportunities, obviously right now you go to something like bitcointreasuries.net, there's hundreds of options now of companies that are doing this. How do you be discerning, or how would you advise that these investors kind of scrutinize these companies in the same way that you are?
I'd say the first thing that you need to look at is whether or not there's any debt at all, right? So even convertible debt needs to be scrutinized. Now, this is the bane of everyone's existence that runs a treasury company. Even Michael Saylor today, if you were to go to him, I guarantee he would tell you not to use debt, right? That's why he's created such a nice structure. He and Fong have this. I mean, it basically turned MicroStrategy into a CLO. It's like, this beautifully structured, vehicle that has no risk to the Bitcoin anymore, right? Anytime you have debt that has risk to the Bitcoin, you're in a position where people are going to wonder what price Bitcoin has to hit for you to have to sell your Bitcoin. And that narrative will overwhelm every analyst call. It'll overwhelm every investor call. And it takes the eyes off of the ball, which is like, well, I'm never going to sell the Bitcoin anyway. Come and get it, right? Like, I used to give Saylor grief about like, oh, in the last winter you couldn't buy, you were trading below, right? He was only trading below for like a couple of weeks. That's like overly harsh. Can't do that. I'm the first one to admit
Oh,
that.
there's still a big Wall Street Journal profile.
But like, I think we all like, went a little bit, overboard on that. Like, if you have conviction, you don't have to sell. Just like most things, like you have time, right? Like, it's not like the moment, Bitcoin, moment you trade below NAV, you need to blow out all your Bitcoin, right? So, and
But I think like the end investors, especially on the retail ends, right? So there's all these kind of ways to participate, but the people who are on their E-Trade accounts and they're looking at these vehicles, right? They want to put $1 into the public markets, and they either want more dollars or more Bitcoin. So how do they get more Bitcoin?
I think if you're trying to get exposure to more Bitcoin, you want to give money to the guys that are able to buy more Bitcoin than you are. And there's two ways that happens. One is obviously they have the highest conviction, and two, they have the best structure to actually, go out there and buy at the lowest cost of capital. So, that could be a MicroStrategy, like 2 years ago, right? Today, that's a different argument, right? MicroStrategy today is obviously trading at a much lower MNAV, which implies that they're buying slower on a percentage basis than like a Metaplanet, right? So the highest growth opportunities are the ones that are hardest to access, candidly, right? They're the ones that are like closest to the beginning with the best management team that have no debt and, are going to raise enough money or have enough money raised to have a flywheel effect. And they have to be in markets where they can actually harness the flywheel effects. And what we mean by flywheel effect is that when the stock price goes up, they can raise money like that, right? So MicroStrategy or any other NASDAQ listed company can raise money in the market the moment that the stock price goes up, which means that when they announce that they bought some Bitcoin and the stock price goes up, they sell the stock, they sell that high volatility asset, the stock, and they swap it for the low volatility asset, the Bitcoin. Then they report that the Bitcoin got bought, stock price goes back up, and they rinse and repeat. That's the flywheel, right? That's what's like effectively a zero cost of funds. That's why that works so well. You got to be at a certain scale to make that work, right? Now, Saylor, if you'd asked him last year, because I did, what scale I would need to make these companies in order to harness the flywheel, he said $1 billion. Today, we've seen from folks like Joseph Honorati and those guys that like with much smaller companies that you can harness those flywheel effects at a smaller scale if you have a strong enough marketing machine and a strong enough capital markets machine, right? Both of those things together, like like a Nakamoto, type marketing machine, with a 10x type, capital markets machine, can create those flywheel effects at smaller scales. And that's kind of what you have to do in a lot of these emerging markets, right? Because you're not going to put $1 billion into a random company in Bahrain, like we announced earlier this year, right? Like, that's, there's not enough liquidity in those markets. But, and this is what's really interesting about, our overall strategy and why I think everyone has demanded that we do this. Again, it's a product of reverse inquiry. Like, I'm not in a rush to be a public company CEO again. I've done it. And it is, you got to be like Sailor or Bailey. You got to be on TV all the time, right? The reason that we've been compelled to do it is largely because you can't. Not only is it really hard for investors to invest in emerging markets because they just don't have the rights to do it if they're institutional investors, or practically speaking, most people with an E-Trade account just can't buy a random stock in Bahrain, right? But there's very limited liquidity for these stocks in these other markets. Like, look at that, Smarter Web, awesome, deal, in the UK. It's on an exchange called Aqueous, where it represents 95% of the trading volume. So even though it's now $1 billion company from like $1 million company, like literally 1,000x, it is like, it would be impossible to sell, at $1 billion, right? It'd probably be impossible to sell at $100 million, right? So it's the liquidity is definitely a question in these emerging markets. But if you have them in a NASDAQ listed vehicle, then if anyone did need to sell, that would be fine. And we're never going to sell because, again, we're long the Bitcoin. So for someone, a retail investor that wants more exposure to Bitcoin and wants the type of returns that you can get in emerging markets, you really need to invest in a company like Nakamoto, or like our next upcoming deal, that will be able to get exposure to these emerging markets where you do have much more growth, where Bitcoin is hard to buy, right? Where there are like access narratives, right? And this is the one last thing I'll say, and where actually it's interesting, where there isn't really a local flywheel effect. So where it really makes sense to invest in that NASDAQ listed entity that can actually produce a flywheel effect. Well, what do I mean by that? So let's say, we have a slate of 20 deals all over the world, right? And we announce the next one. Like you saw the first one, great, everyone's very happy. We do the next one. When we announce the next one, let's say it's our deal in Poland, and we announce it, boom, stock goes through the roof, right? And we then are able to raise money in the market, and we're able to now fund the next deal. Not necessarily the Poland deal; it's already paid for, right? But then the next deal, and the next deal, and the next deal. So this ability to essentially harness the flywheel in the U.S., which is the deepest, most liquid, most Bitcoin hungry market in the world, right? Being able to harness that flywheel here, and then deploy that capital into the emerging markets, is a huge arbitrage opportunity. So that's big. And then the last thing I'll say is, like, a U.S. stock, really does work well because anyone in the world can basically buy a U.S. stock. U.S. investors really can't buy stocks in most other places in the world, and most investors globally can't buy stocks, except in their home market and the U.S. The U.S. is like the NASDAQ and the NYSE are like the markets that almost everyone in the world can access pretty easily. You can even buy them out of China, right? You can buy them 24 hours a day. So it really doesn't matter where you are. A U.S. stock makes sense. And so companies that have exposure, like, that have great management teams, that are big enough, that have the, wherewithal to actually harness that flywheel effect, those are more potent to me than good marketing long term, right? Because long term, marketing creates hype and like creates volatility, and it's great, right? But ultimately, what it comes down to here is, like, are they executing well, right? And so, as a Metaplan, again, great example. That's an execution story. They've done good investor relations, and yes, they have the Bitcoin Magazine franchise for Japan, but that's not really that big of a deal, right? Like, what's a really big deal is that every single week Simon reports positive news about buying Bitcoin, right? And then every single week he tells you he's going to buy more, and then he does it, and then he reports it, and then the stock goes up, and then he buys more Bitcoin, reports it, and the stock goes up, and then he sets a new target, and then he buys more Bitcoin, and like, it's just, that virtuous cycle, that flywheel is something that is an execution driven flywheel. It's about saying what you're going to do, doing it, rinsing and repeating. And like Sailor has hammered that into all of us over the years, like transparency, transparency, transparency. Just be transparent. Tell me what you're going to do.